From a verticals point of view, Krithivasan was telling me that it's consumer autos that were really at the sharp end of the slowdown in discretionary spending and exposure to the US market. Is this just a TCS-specific story, or who else has exposure to IT services in the US market and therefore can only really stage a meaningful turnaround once all this economic pessimism and the tariff-related uncertainty recedes?
Yeah, no, I think, for the consumer and auto manufacturing, I think that's a pressure which everybody has been facing now for the last 9 months. And in the last 3 to 5 months, that got further accelerated because of the tariff-related uncertainty. And I believe that is not going to go away in the near future. And that is something which all Indian IT companies will get impacted. And just to highlight, retail consumer sector is the largest after BFSI, and even auto manufacturing has low to mid single digit exposure for everyone. So that is going to impact everyone. But just to highlight, in US markets, the airline company Delta gave a very positive outlook for the rest of the year, where consumer sentiments have actually been improving. So probably the tariff-related uncertainty is going away in the mind of consumers, where as per University of Michigan Consumer Sentiment Index, there was a sharp jump from 52 in May to now 60 in June. So yeah, it seems like the consumer sentiment is improving, which potentially should reflect the lag in these sectors in a positive way.
Sumeet, when you look across your coverage area at IT services, listed IT services in India, who then is best positioned, least exposed to the most vulnerable markets like the US and most diversified, perhaps, to ride out this cycle?
So yeah, I think among the large cap companies, I would say HCL is slightly more diversified across manufacturing, consumer, BFSI, and then I guess their exposure is also more towards cost optimization, vendor consolidation deals, which is the flavor currently for the market. But yeah, I think in the mid cap space, you have companies like Coforge or Emphasis. Emphasis is rather more BFSI oriented, but Coforge is definitely more diversified across BFSI, travel, transport, hospitality. So yeah, I think TCS and Infosys are more BFSI and US exposed, but then you have other names which are much more diversified, and that's where we got a better growth guidance from HCL for this year compared to Infosys.
Understood. That said, Infosys has been responding with job cuts. Does this uncertain global environment, Sumeet, mean perhaps more belt tightening, job cuts, a hiring freeze, cost discipline, or do you think that these players are able to ride out the cycle?
Yeah, no, so we believe that the IT services spend, particularly on digital transformation, have been quite muted for the last 3 years. And in the last 3 to 4 years, if you see the corporate tech spending, that has been largely on chips, on cloud, as well as on software and SaaS, probably at the expense of IT services. Now, with the recovery in BFSI, which started to happen last year, and with the potential interest rate cut, it was expected the recovery will happen in the rest of the sectors as well. And as far as the jobs are concerned, I mean, the TCS result was a clear reflection that Gen AI is not bringing in a huge non-linearity for IT service companies at least. Although it is bringing that non-linearity between revenue growth and headcount growth for the platform-based companies in the US, where we have seen a lot of layoffs, but not so much in Indian IT, where I believe, given the fragmented market share structure of the IT service companies globally, the sector globally, the non-linearity between the two will never kick in. So the revenue growth should lead to headcount growth. So not so much bearish, I would say, on the headcount growth perspective for the Indian IT company.
So let's talk about that AI boom. And could these earnings, we've heard from TCS, could they have looked a lot worse if it wasn't for the AI spending that still seems to be relatively resilient despite the fall-off in enterprise? Or is even that mighty center of demand going to come under some stress?
No, clearly, I think AI is a start of a new technology cycle where, as far as the IT consultants like TCS and Infosys are concerned, it's a new technology to upsell, cross-sell to their existing clients as well as new set of customers. And mind you, when you talk about Gen AI solutions, it involves a lot of underlying work around data, around cloud, around cybersecurity. So it is around companies which do not have their data structures in a proper format. It's an added opportunity for IT service companies and consultants to guide them through. So whatever strong spending you have seen for NVIDIA, the chip stocks, as well as for the cloud hyperscalers in the last 2, 3 years, we believe that opportunity will start shifting to IT service companies as macro improves going forward,
Yes.
where IT service companies will be the key plumbers to stitch the complex tech ecosystem.